And dear students, today we are going to discuss about important steps in the procedure of issue of shares. We know that company raising their capital by issue of shares and debentures. Whenever company going to issue shares, what are the steps in the procedure of issue of shares? First step is issue of prospectus. We know what is prospectus. Whenever company going to issue shares, company will give the invitation to the public. That invitation may be in the form of periodicals, or in the form of notice, or in the form of circular. So that invitation in the form of circular or periodical or notice, or it is an advertisement given by the company to the public for subscribing shares. So that document company will issue to the public for subscribing shares. That is the first step. Company will issue prospectus to the public. After seeing the prospectus, public what will do? They will apply for the share. Okay. So who will receive that application? Company will receive the application. So second step is receipt of application. We know that whenever the public is applying for shares, if the minimum subscription is satisfied, you already studied what is minimum subscription. Minimum subscription is the minimum number of share application received without facing inadequacy of capital in future by the company. So that minimum subscription normally we decided as 90% of the issued capital. So 90% of the issued capital application if you receive, then we will say that minimum subscription is satisfied. Then only company what will do? Company will give the share to the shareholder. That process we will call the name allotment of share. So after application received, if the minimum subscription is satisfied, company will allot the shares to the public. That is known as allotment of shares. Okay. After allotment, at the time of allotment, so we will say company will send a letter of allotment. Those who are getting the shares, company will send a letter. That letter is known as letter of allotment. They will get the shares. And if anyone's shares company application company rejecting, then company will send a letter of regret. Okay. So whenever anyone getting shares, company will send letter of allotment. And anyone's application company reject, company will send a letter of regret. Okay. So first prospectus will issue. After prospectus, application will receive from the public. After receiving application, minimum subscription is satisfied, then company will allot the shares. Whenever company allotting shares, though to whom they are allotting, they will send a letter of allotment. Whose shares they are rejecting, they will get a letter of regret. This is the procedure of issue of shares. Now, we have to study about accounting treatment. Whenever share issuing, what are the accounting treatment? First, we can discuss about issue of shares at par. At par means at face value. Suppose the company going to issue 1000 shares at the rate of rupees 10. It can be 10, it can be 100, whatever it may be. So we know that number of shares is divided into total capital of the company is divided into number of equal parts. One part is known as one share. So whenever company going to issue shares at par means it's a face value. It can be 100, it can be 10. Suppose company issuing 1000 shares at the rate of rupees 10, then par value or face value is 10 rupees. Okay. So company can collect the money in lump sum. This 10 rupees completely together. Then we will say that it is lump sum payment. Okay. The public will pay the money all together. The shareholders will pay the money all together. That treatment will be studied. Issue of shares at par, that is lump sum payment, all the full value giving together. Then what is a journal entry? So journal entry, see, First journal entry is, normally the company will collect the money through bank. Okay, through the nationalized bank or recognized bank only they will collect the money. So that journal entry, whenever the company receiving application money, journal entry is bank account debtor to share application and allotment account. So whenever lump sum payment, all the money together they will collect, then we will say lump sum payment. At that time, first journal entry is bank account debtor to share application and allotment account. Journal format you should draw. Journal format everyone know. That format we have to follow. Then narration we have to write money received on application for shares. Okay, money received on application for shares. Then second journal entry is share application and allotment account debtor to share capital. Now application money received. After application, what we will do? We will do the allotment of share. We will give the share to the public. At that time, this application money received, we will transfer to share capital. At the time of allotting share, this money will become the part of the capital of the company. So at that time, we will transfer to the account known as share capital. So share application and allotment account debtor to share capital account. Narration, transfer of application money to share capital account. Okay, so this two journal entry we are following whenever we are collecting money in lump sum. Lump sum means full value we are collecting together. Okay, so issue of shares at par means at face value we are issuing. Okay, now we can discuss about whenever the company issuing shares at par in installment. Company can issue shares, collect the money in installment also. They are here also. Journal entries for shares issued at par. Issued at par means at face value we are issuing, but the money collecting in installment. Example I will say, suppose company issue 1000 shares at the rate of 10. How many shares? 1000 shares at the rate of rupees 10. This 10 rupees they can collect in installment. Whenever they apply for the shares, they can collect suppose 3 rupees, and at the time of allotment they can collect suppose 2 rupees. At the time of other installment can be 2 rupees. Like this installment wise they can collect. So that first installment we will say the name application money. Second installment we will say the name allotment money. Third installments we can call the name calls. If it is a third installment is one call, first call. Another installment is remaining, then second call, like that it will go. Okay, so whenever we are receiving the first installment, that is application, whenever application money, that money the public have to pay at the time of they are applying for the share. So at the time of on application time, what is the entry? Remember, bank account debtor to share application account. Suppose 3 rupees out of 10, 3 rupees we are collecting at the time of application. So generally bank account debtor to share application 1000 shares at the rate of 3. So we will write 3000 rupees. Okay, so bank account debtor to share application. Narration, application money received. That means we received the first installment, only application money. If the example 3 rupees is application money, 1000 shares at the rate of 3 rupees, 3000 rupees. Okay, so first we will receive the application money. That is why first bank entry came. Always we will company receive money through the nationalized bank only. Through bank only they will receive the money. So bank account debtor to share application. Then second, at the time of on allotment. On allotment means we are giving share to the public. After receiving application, we are allotting share to the public. At that time, what will happen? This first installment money we received, suppose 3 rupees is application money, that money 3000 rupees we received, we will transfer to share capital, because now they become shareholders, the share money will become part of the capital of the company. So that's why the application money received we will transfer to which account? Share capital account. So second entry, at the time of allotment, journal entry is share application account debtor to share capital. You may have doubt why share application came at the time of allotment, because at the time of allotment only this application money we can transfer to share capital, because at that time only this public will become the shareholder. Okay. So at the time of allotment, share application account debtor to share capital account, that is application money we transferred it to share capital. Now at the time of allotment we need second installment money. Second installment money due date, it is already mentioned in the prospectus which date they have to pay the second installment. Second installment money, we will say the name share allotment. At the time of allotment they have to pay the second installment. So date already they know. At that date the allotment money obviously will go to where? Share capital, because already they become shareholder. So second installment money due date, that money automatically will go to which account? Share capital account. So first entry of share allotment will come like this: share allotment account debtor to share capital account. That means share allotment money due. So second installment date came. So on that date this much money who have to pay? Shareholders have to pay to the company. So it is a due money. So after due, then only we will write the second entry, that is allotment money we receiving entry. Bank account debtor to share allotment, second installment we receiving. Journal entry is bank account debtor to share allotment. Suppose second installment allotment money is 2 rupees. Then 1000 into 2, how much rupees? 2000 rupees we first will transfer to share capital. Then that money we will receive through the bank. So bank account debtor to share allotment account, narration share allotment money received. Here you can see application time bank entry will come first, because application money we are receiving first, then only allotment time that application money we will transfer to share capital. But allotment time the due entry will come first, because we know which is the due date for the second installment. That date automatically the second installment money we will transfer to share capital. Then only we will receive the money. That's why due entry coming first, then bank entry coming second. Okay. Now, so second installment over, allotment time over. Then first call means third installment. If there is a third installment, that money date we know, in the prospectus it will mention which date we have to pay the third installment. On that date, the third installment money automatically we will transfer to share capital. Journal entry is, if it is a first call, share first call account debtor to share capital. Suppose first third installment is 2 rupees. Then 1000 into 2, 2000 rupees we will transfer to share capital. Narration share first call money due. Okay. So share first call account debtor to share capital account. Narration share first call money due. After first call money due, what will do? We will receive the third installment. When you are receiving the third installment, what will be the entry? Bank account debtor to share first call. We are receiving the third installment, that is first call money. So journal is bank account debtor to share first call account. Narration share first call money received. Okay. So first due entry came, then only bank entry for first call also. Suppose our next installment is, we will call the name second call. If second call is there, second call, suppose second call is last rupees is how much? 1 rupee. Already 3 rupees application, 2 rupees allotment, 2 rupees first call. Then how much money remaining? 1 rupee, because our face value we said that 10 rupees. Then second, that last 1 rupees is also the final call. If the last call is the second call, we will write the name second and final call. Suppose first call is the final call, last call, then first and final call. Okay, so at the second and final call money due entries, share second and final call account debtor to share capital, because the second installment, that is here the last installment, we will transfer to share capital account. Narration share second and final call money due. After due, what we will do? We will receive the last installment through the bank. So journal is bank account debtor to share second and final call account. So bank account debtor to share second and final call account. Narration, share second and final call money received. Suppose after second call, third call is there. One more installment suppose is there. Then we will not write here second and final call. We will write only second call. If next call is third call is the last call, we will write third and final call. Remember, okay? So which first call is the last call, we will write first and final call. Suppose second call is the last call, then last installment we will write second and final call. Suppose third call is the last, then third and final call. Okay. In this here I stopped last installment is second and final call. So journal entry, share second and final call account debtor to share capital account, share second and final call money due. Then when you are receiving the last installment, bank account debtor to share second and final call account. Narration, share second and final call money received. So like this is the journal entries are going. So this is the way we have to write the basic journal entries. Okay, so don't forget this basic entries have to study very clearly. First application money, remember application time, bank account debtor to share application account. Then allotment time, share application account debtor to share capital and share allotment account debtor to share capital, bank account debtor to share allotment. Then first call time, share first call account debtor to share capital. Then bank account debtor to share first call account, share second and final call account debtor to share capital and bank account debtor to share second and final call. If the installment is more, then third installment will come. Okay. If it is stopping here, it will be the final call. So this entries, basic entries, study very well. Okay. Thank you so much.